And then you say that the rest of the 99% that doesn't trade is worth so much money, and you pledge it as collateral, and you borrow real money, like actual money against that. That is fraud, right? Of the highest nature. And now I heard this morning, once again, 8.9 billion has gone missing from the FTX thing. That that 5 billion they recorded of liquid assets, that wasn't real. That was FTT and Serum and stuff that isn't worth what they think it is to this point. So I don't know if we can just get past this myopic focus on some bad people did some bad stuff. They did, and that's tragic. But the thing that I'm struggling with, Scott, I think I may have said it yesterday, is there have been 538 banks that have gone bust since the global financial crisis. Not during the global financial crisis, not before the global financial, just since. Do we talk about, we should all just get out of banking. We should all get our money out of the bank. This banking thing is broken. It doesn't work. That proves it. No. One exchange goes down. 2 exchanges, 10 exchanges. There are 500 exchanges. And we say, well, we don't need exchanges. Yeah, we kind of do. And we probably don't actually need 500, but we need some. And we need the ability to transact, between ourselves until such time as the world is completely on-chain in DeFi, which is not tomorrow.
Yeah. And speaking of banks, so we kind of touched on it yesterday, the Silvergate story. We all know what happened, right? Silvergate obviously has investigations happening and clients pulling out and liquidity issues, and they were inextricably tied to FTX. There's a kind of sadder side to this story, right? Obviously, they're losing Coinbase, Circle, Paxos, Crypto.com, Bitstamp, CBOE, Galaxy, Gemini this week, right? After losing Kraken recently, and obviously FTX went over. But what people might not remember is, I think it was like in 2014, 15, this was the only bank that would bank crypto customers, all of these names. And I get it, it's business, but it's sad that they're all leaving.
Sad. No, Scott, that is so accurate, right? Is when the shoe was on the other foot, probably a bad analogy, but true, right? When you were the pariahs, because you were the upstarts and in the sketchy, dodgy business, and this was a quote unquote a real bank, they made a strategic decision. Now, look, I'm not a fan of the actual people that run this particular organization, and I'm not as adamant about them being evil as Mr. Cojotes. And by the way, never ever tussle with Mark Cojotes. I mean, he is not someone you want to be on the wrong side of. And so yeah, I find the story very sad, to your point, because in the end, we collectively need the interoperability between the old financial system and the new financial system until such time as the new financial system is the financial system, which is as inevitable as it was 5 years ago, 10 years ago, but it's going to take time. And you think Haley Lennon, who, she's a pretty active tweeter, and
I know her well.
She tweeted a couple years ago. I think she actually may have worked with Silverbank I don't know. I can't remember the exact things, but she tweeted, look, if the regulators want to take us down, right? If they want to take the industry down, it's the on-ramps and off-ramps of the banks. And so
Caitlin Long has said the same thing multiple times, including a year ago to me in person in Bitcoin Miami. She said, worry about the FDIC and the Fed, not the SEC and the CFTC.
Yeah. And that's where we are now. And look, that's why I believe, and it's just me, and you might agree with me a little bit, but I know that I believe that everything in the past year is a highly planned, highly concentrated effort to cause pain and suffering in this industry. And said it wasn't Sam and Caroline. They were not the masterminds of anything. They were the useful idiots. It's way above their pay grade, and some really, really powerful people are pulling the strings, and they're not done, right? The then they fight you phase, it started last year. It's probably going to go for a few more years, which is.
I agree. It started last year, but the last month has been an insane uptick, right? I mean, enforcement activities from the SEC, seeing every major international agency starting to have an opinion. I mean, we talked about this quite a bit yesterday. It doesn't all just coincidentally happen at once. And remember, I mean, January was like an epically bullish month for the crypto market, actually. So it kind of started in February.
Yeah. No, look. And that's kind of an interesting dynamic, right? Which is you had this, massive campaign, FTX, the crash, going from 24 down to 15. And they're like, yes, okay, we're winning. And then, we made the bottom, and then epic short squeeze. I mean, one of the great short squeezes of all time. In fact, I think it is the greatest short squeeze in Bitcoin in all time. And so now those people are like, hey, what the hell? We thought we killed you. Okay, not dead. So what did they have to do? They had to amp up the game. And they are amping up the game. And I think, this is the casualty of war here.
Yeah, I tend to agree. Next story we have here, and we're putting Mark on the spot to some degree. 3 Japanese banks start stablecoin experiment. Institutions involved are Tokyo Kiraboshi Financial Group, Mina No Bank. I wouldn't call my bank No Bank personally, and the Shikoku Bank, unless it was a crypto bank, of course. Are actually testing with a Japan open blockchain, which is fully compatible with Ethereum and complies with Japanese law, to start utilizing stablecoins in their actual banking transactions. And so where does this fit? Everyone here watched yesterday. Where does this fit in the evil CBDC continuum down to, private and safe stablecoins?
This isn't full evil, right? This isn't like, evil corp evil. But look, this is another acknowledgement that 70-plus-year-old technology, SWIFT et al., needs to be replaced. And stablecoins actually are pretty good. I mean, it's a silly experiment. Actually, I'm gonna do a quick. I didn't get to do my sock reveal because I didn't do my on the margin, so I'm gonna do it for you. So I have the green candle pants on today, but I want to show you the socks. So
I have the green candle.
I have the on-chain monkeys rise on today, and so I was sitting around just the other day, and I was like, I have my PFP monkey, and it's like I'm gonna buy a couple more, and couple clicks, I was moving Ethereum from wallets and into, and bam. And the whole thing was 5 minutes. I didn't have to go stand in line at a bank. I didn't have to get a confirmation email. It was amazing and so fast and so secure. And I could see it in real time. And it was just so much of a better experience of using my money to buy assets that now are mine. And that's the future. And we talked about this yesterday too, is, my little granddaughter, right? 6 months old. She's never, ever, ever going to have a leather wallet.
Ever.
Not ever, right? She's never going to know what paper money is. And that's so cool. The Zoomers, as we call them, the Gen A's. So I think that's what Japan is saying here is they're like, look, it's inevitable. So let's get out ahead of it. And I don't know. Does it go down the slippery slope to pure evil CBDC, constant surveillance, programmable money? Yeah, unfortunately. Look, fiat.
Yeah,
fiat's bad.
Yeah, I was going to say that. I mean, that you could probably be said for any stablecoin just because it's basically digital fiat. But what's interesting is that this is